In today's video, I'm going to teach you how to record a mortgage payment in QuickBooks Online. If you want your books to stay accurate, it's important to record mortgage payments the right way, because a mortgage payment usually includes more than just one simple expense. In most cases, part of the payment goes toward the loan principal, part goes toward interest, and sometimes part also goes into escrow. If you record the whole payment as one expense, your financial reports can quickly become misleading. Before entering the payment itself, you'll want to make sure the correct accounts already exist in your chart of accounts. Start by creating the mortgage liability account if you haven't done that yet. Go to the gear icon, open the chart of accounts, and select New. For the account type, choose Long-Term Liability, and for the detail type, select Notes Payable. Then give the account a clear name, such as Mortgage Payable. This account is used to track the remaining balance of the loan, so whenever you pay down principal, that amount should reduce this liability instead of being recorded as an expense. Next, create the interest expense account. Stay in the chart of accounts and click New again. This time choose Expense as the account type and Interest Paid as the detail type. Name the account something like Mortgage Interest. This allows you to separately track the interest portion of each payment, which is important for both reporting and tax preparation. Once those accounts are ready, you can record the mortgage payment. Click the Plus New button and create either an expense or a check, depending on how the payment was made. From there, you'll split the transaction so each portion of the payment is assigned correctly. Enter the principal amount and assign it to the long-term liability mortgage account. This is the part that reduces what you owe on the loan. Then enter the interest amount and assign it to your mortgage interest expense account. If your mortgage payment includes escrow, enter that as a separate line and assign it to an other current asset account, if applicable. Escrow is usually used for things like property taxes or insurance, so it should not be mixed in with principal or interest. The key here is accuracy. By splitting the payment correctly, your balance sheet will show the true loan balance, and your profit and loss report will reflect only the interest expense. Take a moment to double-check the amounts before saving, especially if you're working from a mortgage statement. That's how to properly record a mortgage payment in QuickBooks Online.